it's very important to remember the objective is for you to use supply and demand in 3 ways. Those 3 ways are to use supply and demand as an indicator tool, a forecasting tool, and it can be used as a trading tool as well. But the most important thing to remember is for you to use this alongside whatever strategy you are currently using. And so in today, what I want to focus on is some of the key concepts once again, but we'll also cover some of these more advanced concepts. So let's go into the examples. We want to start mapping out all of the weekly supply and demand zones. So because I'm seeing an uptrend, the most recent weekly move is this leg here from March lows, these COVID lows from last year, up to this year's highs. So we got a February high this year, 1.42, which is just short of this high here. But what we can see is price reacting to this supply. Now, what makes this valid supply? Let's study this particular zone in detail. The characteristics of a supply zone, if we're looking at a reversal, because we can see price was trending higher throughout 2016 all the way up to 2018. This move, you can clearly see the uptrend. You can see higher highs, higher lows. Suddenly, there was a reversal when these lows were taken out and these lows here. So the characteristics of a reversal, what we want to see is we want to see a rally, base, drop. Okay, so in this example, we've got a very nice base where the body of the candle moving away from this base is a solid candle and it's bigger than the body of the opposing candle. So what I'll do is I'll map this out as a supply, and that's where I'm going to map my supply. And the reason why it's also valid is because it was, if you look at the momentum here, you've got 3 solid Buzo candles which broke previous structure. Okay, so that structure there was broken. This validates this supply zone. I can actually see another, this will probably be a daily. If we zoom into the daily, I will class this as a higher low because we've got these highs and these highs over here that were taken out. So this is a very important level. When we look at this weekly, we want to study it on the daily and on the H4. If we use this replay tool, we'll be able to study this in more detail. And we want to be able to look for zones within zones. This is the higher low that I was talking about. This higher low is very important because this final leg breached all of this structure. For me, this is a very important level. When that was broken, there was a strong confirmation. Now on the daily, I can see here there is a rally, base, drop. And again, it's got 1 candle. And when price breached this low, we've got a bit of consolidation here. So it'll be really interesting to see what happens later in the future. Let's map this out a bit more accurately. Okay, so now we've got a strong supply zone over here on the weekly time frame. So if we go back to the weekly, price hasn't quite reached the daily level. However, it did spike right through that weekly. It was a deep spike in there, 160 pips. Nevertheless, it did still react from this level that's currently. So if we continue mapping out our zones on the weekly, we can start to see all of this market structure, because now that we know that there's a shift in trend, we can start to map out all of these structure points that are quite significant in price. And so we want to see what caused the breach of this, what supply zone. So because we're in a trend lower, we want to see a drop, base, drop. Where do we see that? We see that here. We see a drop, we see a base, and then we see another drop. So this is a good supply zone. This is a continuation pattern. So up here, we have a rally, base, drop, supply. So this is a supply zone. And it's also a zone within a zone. So we have a weekly and a daily in there. And this one, we have a drop, base, drop supply zone. This is a continuation pattern, reversal pattern, continuation pattern. As you can see, price has gone back into this. So this is no longer a fresh zone. This is an original zone. If price tests this supply zone more than 2 times, we should no longer see it as a strong zone, as a strong level. So I wouldn't particularly trade it with that much conviction. I would probably use it more just as a way to forecast that there might be some reaction there, but I wouldn't be using it as a place to have a strong conviction on a particular trade idea. So rule of 2, this is a 1 test and we've got 2 tests. So here is still okay, right? The first test is the best one. You get the best reactions. The second test is also good, but not as good, generally speaking. Anything after that you want to be careful with. Why? Because with supply and demand, the assumption is that this point of origin where we saw a continuation pattern is where you have institutional orders. All of these orders are waiting. And so when price returns back to, when they push price back into their orders, above all of this liquidity, into where their bigger orders are, that's why you see this strong reaction, right? You see these huge weekly moves. If we were to do the same thing and look into this zone, on the daily, we can see a zone within a zone. We look for something similar. We want to see a drop, base, drop. And I can see one right here. So you can see there's a zone within a zone. So these are the two proximal lines and these are the two distal lines. And so if you want to try and trade this as a swing trader, you can see that this daily zone was actually tested twice. 1, 2. That's probably the most optimal play to trade. So if you're trading this and you're looking at this particular market structure here or even this one, you're looking at this price breaking through these two structure points and you think, right, where is the supply that caused this break of structure? Let's look for the weekly zone. Okay, we have that now. Let's look for the daily. Okay, we have that. So now that you've got that, you've got these two reference points. So from the 28th of May, you had 13 days to prepare for this trade if you're a swing trader, because you can just have an order there ready. Why? Because you know that this zone is not only a daily zone, it's also a weekly zone. So let me just get rid of this one. So you can see here, this is the weekly zone, and this is the daily zone. Okay, so there's two different zones there. That's finding a continuation pattern. Now there's another rule, advanced rule on supply and demand called the continuation pattern, rule of 3. So the rule of 3, it suggests that when you have a new trend, so for example, we're looking at the daily, we know that there's a new trend because all of this structure has been broken, that when you're looking for a continuation pattern, you should only trade the first 3, because the lower that price goes on a downtrend, you're trading a supply zone continuation pattern, the more likely you're going to get a strong bounce. The more likely price is going to go in for a deeper retracement, and the more likely price is oversold and it's closer to stronger support. It's closer to demand. So over here, we can see that there is some strong demand here. You can see the move and you can see the momentum coming off here is quite strong. You can see break of structure. And so we can map this out as demand. So let's look for a demand zone here on the daily. I can see here that there is a drop, there is a base, and then there is a rally. So if we map this one out as a demand zone, we want to be careful with selling supply that's too close to this for 2 reasons. 1, you can potentially get a strong bounce from here, and 2, the risk reward isn't great. So you want to have maximum 3 continuation pattern supply levels. You don't use it as a trading zone, if that makes sense. So let me explain what that means. So here we've got a 1 continuation pattern. We can clearly see here there is a drop, base, drop. We've got another one here. So this is number 2. Okay, drop, base, drop. Once this low gets taken out, then there is a supply here as well. And so the probability and the accuracy of this supply, it weakens, it lowers. Why? Because you've got support and you've got the opposing zone. And so the rule of 3 suggests that only trade maximum 3 continuation patterns of the opposing zone. So if we were to use this daily supply over here, we can use it, but just look at the risk reward. It's not that great. We could potentially get a deeper retracement up here. Whereas the risk reward from here, from this zone and this zone, is a lot better. So the rule of 3 is don't use zones that are more than 3. Don't go doing the 4th one. If this turns out to be another supply, you want to be careful with trading any further continuation patterns. So let's see what happens with this. Okay, all right, you see? So 1, 2, 3. 3 zones that you could have used, but any more zones are just not high probability. So we've got another one here that broke structure. So it created a new low, and you can see prices reacting to it. But this is the 4th one, and you're going to be trading it to the next demand level, which is down here. We have a drop, base, rally. So let's map these out. So here we've got a demand zone, drop, base, rally, and we've got another one here, demand zone, drop, base, rally. And so this is a very dangerous low probability zone to be trading.